What's going on, everyone? Good morning. Good afternoon. This is Jordan with Kaka Trading and Investing. We are getting ready here Tuesday, March the 31st for our live stream of the New York session. Looking at the markets, making sure we're in flow and searching for setups. We see that DXY is a little firm today. DXY is up about 0.5%. Now it is up for debate whether or not this is year-end flows. Month-end flows. Today's the last day of the month, or whether or not we're seeing that further demand for the dollar through that dollar shortage. I think it's the later. We're going to find out tomorrow. Speaking of tomorrow, and as well as the rest of the week, Thursday and Friday, we have some pretty important numbers coming out, and they're going to probably come in pretty poorly. It could have some type of shock effect on the market. I'm looking for a resurgence of risk off. We're seeing a little bit of that bid today. We're going to look at the setups in a second. Most importantly here, we have ADP non-farm employment change, followed by the ISM manufacturing PMIs. Thursday, unemployment claims should be over 3 million. And then going into Friday, we have non-farm payrolls and ISM non-manufacturing. So, the past month almost, we haven't had to look at the calendar because the calendar has not been in play. I do believe that this week, the next 3 days, it's going to matter as we're going to see some headline shock come in. Let me refresh that page. All right, let's dig into the markets. We'll start with the S&P, which is down a little bit today. Currently trading up off its lows. You could see, actually, this looks pretty exciting to look at. You see almost like a rising wedge developing. Maybe not so much a rising wedge, but that trend line, to me, that looks, yeah, it is a rising wedge. Definitely a rising wedge. And not only that, why in my gut, I feel like we're going to roll over. If we do continue within this rising wedge over here, and we come right into that heavy, strong resistance between 2,800 and 2,920, you could see that would be the peak of the wedge. So this is an interesting pattern to watch. I'm going to keep that definitely on my charts. I do think that if we break down out of this wedge, that there is a strong chance that we come down and test towards the lows. So watch out for that. We're just going to run through a bunch of things here and kind of get a feel for the markets. I want to get into the pairs that we looked at last night in TradingView. Before we do, let me stop over here with Bitcoin. And you can see Bitcoin is continuing. It's just kind of hanging out here around this. I don't know if you want to call it resistance or if it regained the support. It looks like it's hugging that line over here. It looks like it's getting ready to break to the upside. Today, you noticed that equities are down, Bitcoin slightly up. Both are barely up or down 0.5% either way. I don't know how tightly correlated right now to the equities Bitcoin is. I don't think it is long-term correlated whatsoever. Let's see, as we're about 50 days into the halving cycle, this could be, in 6,000 area, this is pretty important. In the 6,000 area, in the greatest scheme of things, if you're not accumulating here, I think you're missing out on what Bitcoin is and the opportunity offers. This is the area that you need to be looking not only to accumulate as we get ready for the bull market phase over here. Obviously, this was an opportunity. I'm holding trades down from 41, 52 and 61. I'm not going to let those go. I will add to them if we do come back down. And there is the possibility, of course, that we do see some type of liquidity event again. But it seems to me that the action that the Federal Reserve took, it's probably enough that we're not going to see any type of liquidity crisis, at least in the near term. So trade accordingly. Let's take a look at gold. And so a couple of interesting things to note about gold. First of all, it's still within the range. It's still between our resistance at 1645. Get above that and I'll flip to a bullish bias. Right now, I know I'm consolidating, but I have that bearish bias to it because I would like to see us, trade down towards 1551, which I think would be a lot nicer of an area to pick up gold at. I think we trade down towards it. I'm waiting, and that's about it. We're consolidating. You see, we kind of fell down a little bit, but gold picked back up. I do think longer term, gold versus other currencies outside of the dollar is absolutely it's going to continue to definitely outperform. And if you're trading gold versus any other currency or a portfolio of them, that's definitely a strong play. I'm not so bullish on gold versus the dollar right now. Again, price action will tell me what happens, the technicals, and if we get above 1645, all right, I could very well see a break above 1700, and then 1900 would not surprise me, but that's not happening right now. DXY we saw is a little firm today. It came into this area of resistance and so far is bouncing off. But at the same time, it's up 0.5%. If gold does, if the dollar does consolidate over here as well, that would make a lot of sense. I would like to see that type of price action a lot more than what I've been seeing, which has just been up, down, up, down. Very rare you get that type of movement for a sustainable time. So we'll see what happens. If we get above this resistance that we checked out today, and you can see that we made a higher high over here and then peeling off of it. All right. So if we start resuming downwards, then the dollar could see some further weakness because of that, taking out stops over here. At the same time, if we get back above this area of 99, 90, call it 100, right? The whole number, at that point, we could see definitely a move back up towards 102. The euro Australian dollar has been a little bit tricky overnight. This is one of the pairs that I looked at TradingView as a live setup, and you can see that it did make a higher high over here, peel back down, and now currently is coming back up, testing that high. It's still a valid setup, and it's definitely in play for myself. I'm seeing the Australian dollar and New Zealand dollar weakening this last 24 hours. But I think also there is some opportunity versus the Swiss franc that we're going to look at in just a moment as well. I just want to pull this up, the chat up. I cannot see the chat. Give me 1 second so I can pull it up with you and see what is going on. Say hello to everyone. And all right. You know what? One of the most important things as a trader is to be really resourceful and creative. I don't think that's talked about too much. How important it is to be flexible, resourceful, and creative. I think it's essential. So let's keep going though, because the Australian dollar, New Zealand dollar has the same exact little bit of fake out to the upside, traded back down, and now is resuming upwards, right? So we're seeing euro weakness versus dollar, but we're definitely seeing the weakness is coming in strongest versus the Australian dollar and New Zealand dollar. Australian dollar is, I believe, the weakest pair on the session. So both of these, as they are coming back up here, they both look like live setups to me. It's also about, for me, it's definitely being choosy and picking that wave. And out of the bunch that I see coming in right now, we're going to look at them, the rest. Although these are valid setups over here, I'm not taking them. I'm deciding to let these two slip by. But however, we'll look at them right now. The Australian dollar, Swiss franc. I like this trade. I like this trade because I'm kind of seeing what's going to happen the rest of the week with the data dump, right? That could really hit some risk off for me. These are now after the first test. coming up here. It made a higher high overnight, taking out stops, and now is resuming downwards. I like that a lot. So if it gives me an entry on either one of these pairs, on both of these pairs, I'm definitely taking a nibble here for sure. I want to get into these trades. They look like my go-to right now. Now, just one piece of relevant information as we continue cruising through these charts, and that is that I saw that in China, they had reopened the movie theaters, 600 movie theaters, and then they closed them down again. I don't know if they closed them yesterday or the day before. I first found out about it yesterday. They had to close down the movie theaters, and they said that this time they will be they're not looking to reopen them anytime soon. It looks to me, obviously we're in a dark blackout period. We cannot get any type of real information out of there, but it looks to me as if, as they're trying to get back to normal over there, that they're seeing a resurgence in cases, and that's not such good news. All right, I want to keep going here. We could look at this looks good, but I have to be honest. In looking here at the Canadian dollar, Japanese yen, from what I see from my eye, this is the downtrend, came back up, right? This was the play up here, right? Now this is a momentum play down here as you're coming down, making lows. And this is definitely a strong momentum play here, but it's not something that I could take or would take over here. I think, let me pull up the true trend over here. I think it'd be really helpful for me. Hold on a second. It's like I lost my way around TradingView. All right. So again, just pulling up here the true trend to give me a little bit of a guide during this move. Again, this is the swing setup for me. Now, you could see that you're trending down nicely over here. You have a lot of momentum. You're seeing yen strength pick up. Canadian dollar continues to be weak. By the way, out of curiosity, oil is it's off its highs of last night. I saw it up about 4 or 5%. Now it's back towards 2050. So what I like to do definitely in this situation is wait for that entry CCI to be oversold in the downtrend, which was over here. And if I was trading this really actively, looking for just a short-term trade over here, my entry would have been a little bit over there, Thomas. It's about 40 pips up higher. But if you're already in this trade, you got one to hold, that's for sure. The Australian dollar, US dollar, we could take a look in there, but so this is down 1% on the day into that area of support. Could you buy it over here? Well, so there's the fundamental question of what's going to happen with the dollar. Are we going to see further dollar weakness, or are we going to see that further dollar shortage and demand for the dollar? Again, I lean towards the later camp. Today or yesterday, in the last 24 hours, the Fed had to open up a new form of swap lines directly to central banks, looking to buy securities directly from them instead of through dealers. There's problems, right? There's problems. I'm also seeing, again, we're talking about that second wave possibly happening in Asia. Does not bode well for the Australian dollar. The Australian housing market is just tumbling. I'm not a fan of the Australian dollar. I think we're going to see much lower lows. I think this is an opportunity. I just added a short this morning on this trade because why? Well, if we do resume upwards and get above this resistance, I'm long. I mean, I'm wrong and out, but I have much further downside potential over here. A few hundred pips just into the next area of resistance, right? And then we could see what happens from there, whether or not that's the place to take profit if we get down that far or if we go down further. But again, I've been building up a portfolio. I've been a little bit longer term minded, this pull up into this area that we're seeing on the Australian dollar, the US dollar, finally, because here I was, I was missing being short here. I was wishing I was short down over here. And now we've come back up after $6 trillion of stimulus, and we're into an area of resistance. So I saw resistance until proven wrong. This is my opportunity. I'm getting short here. Is there a little bit area of support that we've come into? Yep, that's for sure. Is this an uptrend starting? This could be an uptrend starting, maybe. But I'm looking longer term. Longer term, we're in a downtrend. We're into that area of support. If you see this off this support over here, because we are into support. If you see us resuming off of it, all right, then you could get long here. But there's no indication to get long here right now. Zero, right? But if you see price start resuming off of this and you want to get long, okay, you get long. Make sure as you come into this resistance here that you're in a downtrend. If you back up a little bit, make sure that you lock in your stop just in case to protect yourself here. But if you do break above that area of resistance, all right, then you got something in play, right? Because then we could see, we'll have to find out where we bounce to and how high we get. But right now, I'm leaning towards the other side. If you're looking to take a buy off of this support area over here, if you're saying, okay, we bottomed here, this is the start of a new uptrend, this is a pullback into the uptrend into support, wait for price to take you into that trade to get long. Above this resistance, it looks a little bit safer to me, but here we are. Yeah. Good morning, good afternoon, everyone. Canadian dollar, US dollar. Yeah, gold we just looked at. Gold is consolidating. I have a bit of a bearish bias to it, looking towards around 1550. You could just pull back on the live stream. We just started 5 minutes and see where we looked at gold. US dollar, Canadian dollar here. Oof. I didn't have the gumption when price pulled back into here because of the large volatility that we were seeing to step in over here, right? Wow. I wish I did. This looks so beautiful. I think the biggest story on gold, Johnny Jet shared with us yesterday that Canadian crude was trading around $5. The reason being is because that is inland. They have to actually ship that, get it to the coast, to get it on boats and get it out there. And instead of trading towards $20 where WTI is trading, it's trading all the way down at $5. So is inland Texas, all the way down at $5. Oh, this is one of those things where how many people are affected by this. The Canadian economy is definitely very strongly tied to oil. You have a lot of families dependent on it. That's tough. But as traders right here, Canadian dollar continues to be weak. Dollar is just looking so strong over here, up here a little bit higher. I say a little bit higher. What is that? That's about 120 pips or so is when we're coming into the area of near-term resistance where you have to look for some profit taking and then see what happens there next. Let's draw that in there so that when we see what happens as price comes into that line, we'll know what happens next. Checking in on the dollar again off of, it made that higher high over here, which could be a little bit worrisome if you're long dollars, as you make that higher high and then come back down, but it's still up 0.5% on the day. It's pretty strong versus the euro, not versus the yen. US dollar, Japanese yen is something to look at because next week Bank of Japan is set to act. So I imagine they're gonna. This is why I'm a little bit focused on Swiss franc pairs versus New Zealand dollar, Australian dollar, and not Australian dollar and not Japanese yen pairs versus those currencies, as they're both pulled back in towards the same setups. If you look at the Australian dollar, Japanese yen, you could see that we're retraced all the way up into this resistance and then are coming off with the Japanese yen stronger than the Swiss franc today. If we look at the Swiss franc, Japanese yen, we'll probably see that, we will see that the Japanese yen is stronger. However, I'm worried if I get into a position trade, what will happen next week with the Bank of Japan acting and the potential for the yen to be weakened. So I'm looking towards those same trades, but with the Swiss franc. So you can see the similar setup. Definitely the yen is stronger today. I'm just kind of looking out a few days ahead and preparing if I could get myself into a trade where I'm not going to get shaken out on some near-term central bank moves. It's that time of where it's that we're in that type of environment where central banks are just full of bazookas. Yeah, okay, it's not that they have to get it to the coast, they have to ship it through the pipeline and heat it up first. Sounds like a nightmare. See, Thomas, that's a great, I mean, that's where I'm at too. I still think things are very fragile. And although I'm hoping we don't have any type of sincere liquidity crisis as we were having just a couple of weeks ago, I do think that demand for dollars is absolutely strong. And there, look at the pound Canadian dollar. Wow, I don't know why the pound is uber strong today. I'm not sure why. But look at this. And actually, let's look at this. It's I have to tell you, it's very tough because we're going back just a week ago or 10 days ago, and the pound was just getting destroyed, right? And then, obviously you could see that it did come down into this area of support and bounced off there. But look how hard these bounces are. The volatility in FX, which is not just one way. You're not looking at these just explosive moves, which I have to say in 2008, it was more one-way moves. We're seeing huge volatility and we're seeing moves in both ways. So be careful out there. Be careful out there. US dollar, Swiss franc getting back above. If it closes today above this support, that will be pretty, the bulls might have a chance to get back into the game. Let's put it that way. Now, what happens if we don't? What happens if we don't close above this area of support, which was, I mean, I'm marking it green, right? But it's resistance right now unless we close over there. If we close above this area of support, that looks pretty good, right? Looks like that the bulls have a fighting chance over here. If we reverse, if we do not close above this area of resistance and close below it, and then start resuming downwards, watch out. Watch out. This is the pattern that we looked at the other day when you see this sharp down move and then two up bars. If this resumes back downwards, we could see some increased selling pressure there. So although this has got a bit of a bullish hope to it right now, watch out what could develop over there. That pound, first of all, this is something that I should have been much more aware of because I love these little triangles and I love the trend lines over here. And this breakdown over here, after you remember the euro rising and rising and rising and rising versus the pound, and it made little sense, to be honest. And as we can then consolidate it, and that's why after big moves we look for consolidation. Here's the consolidation, and then the next leg. It could be up or down. You never know which way it's going to go. But here you can see the breakdown. And the only reason I'm reviewing this is the only way you get better is by closely reviewing your trades, the trades you've taken, and the trades you haven't taken. All right. It's the same thing as working out. When you work out, you get muscle memory from the actions. Right. It's the same thing if you write every day. Right. If you get creative and you start writing different ideas out. All these things rewire your brain. So the only way you could rewire your brain to spot things as they're unfolding and to start thinking ahead is by continuing to take a look back at them and see where you made your mistake. And a mistake doesn't mean that you took a trade and the trade didn't work out. Well, actually, you could have a trade that you take and it doesn't work out and you traded the trade perfectly. There's no mistake there. That's part of trading. But a mistake is something that was relatively obvious that you didn't take advantage of. That's a mistake. I want to check New Zealand dollar, US dollar, which is also weak today. It was hard for me to find the resistance over here. All right. It was hard for me to find the resistance over here. So now that it's a little bit clearer, I'm going to put it in case we trade back above it, use it as a guide going forward. Right. But we are now definitely being rejected off of this resistance over here. Strong signal right now occurring. Looks good. Both the Australian dollar, US dollar, New Zealand dollar, US dollar. Is this also into an area of support? Yeah, you could, just like on the Australian dollar, the trade that we looked at earlier, this is also into an area of near-term local support. It is possible. It is possible. I'm leaning to the bear side here, right? I'm leaning towards this is a downtrend. We've pulled back into the first resistance and now we're resuming downwards. Is it possible that this was the bottom and this is now an uptrend and this is a pullback into support? Yes, that's something that very well could be taking place. Again, it's the same thing we looked at with the Australian dollar, US dollar. Whereas if we resume off of here, you're able to get an entry, you can manage the trade that way. I lean towards the bear. I'm looking. I think that the economic damage from this whole situation is just beginning. That's the camp I'm in. I don't think that the reaction by the Fed is enough to fix things. Probably to stop from a immediate depression. Yes, probably enough to stop any near term breakage of the system. Yes, but the economic consequences that are going to be a result of this, well, I believe they're going to be pretty severe, right? So going back to risk, right? This is the same thing you're looking at on the Australian dollar, Japanese yen, Australian dollar, Swiss franc, Australian dollar, US dollar, across the board, right? This is the big sell-off. This is the retrace. This is the area of resistance, right? So follow this as a guide. This is a good pattern to watch. We're talking about recognizing those patterns and being able to trade around them. This is a strong pattern over here, this rising wedge. This looks to be very, very, very bearish to me, and it will be if we break down to the downside. Let's see. Obviously, the markets are the markets. They're ever evolving and changing as we just keep getting more and more data and lots of different things to price in all the time. Bitcoin. So there's a strong, if you go down into the description, right there, you click on the trading view, you're going to see a video towards the top on Bitcoin. It's a short video, 2 minutes. Watch that video and then watch the video related to it. You'll see a link at the bottom of that trade idea, which gives a 4-minute overview of Bitcoin, a longer term. When I say longer term, let's call it probably the next 45 days of Bitcoin. And both of those are valuable resources. And I definitely recommend taking the 6 minutes it will take to watch them both. And then you'll have a firm, clear look at the way I'm looking at Bitcoin and what I see happening. It's accumulation time. Gold, though, since we're finally speaking about money, so again, above this resistance over here, I will definitely look for a possible retest and breakout above 1700. But right now I lean with a bearish bias, although we're neutral, we're consolidating. You could see that we're consolidating, right? Off of this resistance, I'm looking us to fall back down, and I want to see if this support down here at 1551 holds. If it does, I would take a paper trade on Bitcoin. Good morning, Hanero. Good to see you. Pound Canadian dollar on fire. Tom has talked about the Canadian dollar, Japanese yen. Where else are we looking? So I'm seeing most of the DXY move is coming again. We know that it's most heavily weighted towards the euro. It's making big gains versus the Australian dollar and New Zealand dollar today, both down about a percentage point. But the yen is still strong. Okay, the dollar is stronger than the yen today, but the yen is definitely putting up a fight, and the yen is strong relatively to the market. So it would be the dollar is the strongest, then the yen, then the Swiss franc. What does that mean to you all? What does it mean to me? It means to me that we're back towards, since the Fed acted, we saw this big retrace. But prior to that, this is the exact scenario we're looking at. Strong dollar, strong Japanese yen, strong Swiss franc. We're back there today. And are we breaking down out of this pullback into resistance we've seen across the board? Australian dollar, Swiss franc, New Zealand dollar, Swiss franc. Why no one knows? That's what I'm playing, right? I'm now looking for as we pulled back up into this area of resistance. You can see the consolidation. Looks like we didn't get to break through, and now we're coming back down. At least that's what I'm looking for to happen, right? Dollar strong. Here's a look at the New Zealand dollar, US dollar. Get below this area of what is near-term local support. Get below there, and we could start seeing some definitely acceleration. Again, that would also mean a couple of different things. That would mean that the dollar has broken back above 100. And if it does, I think we do see further extension. It's never easy. None of it's ever easy. But as long as you wait for your criteria to be met, and as long as you're taking each trade with correct position size, and obviously as long as you're buying off support in an uptrend and selling off resistance in a downtrend, you're always going to have favorable risk to rewards. And if you do that, you're going to be profitable. Everything else in trading, as far as the discipline, the psychology, all those are like a big mess, like a windstorm, if you don't have a strategy to follow. Once you have a strategy that you find yourself making money in, it becomes really easy to practice that discipline. It becomes really easy. So I feel like I have a very Hanero. Oh, we didn't even look at the pound Japanese yen in honor of Hanero. We definitely have to. So Hanero, the pound, I got stopped out of a trade today on the pound Swiss franc, which I did take, and I got stopped out of it because the pound is just kind of doing its own thing today, reversing the market, and this remains fuzzy for me. So I'm stepping to the side. I'm focusing on the Australian dollar, New Zealand dollar, Swiss franc. But on the pound Japanese yen, it's the reason I bring it up because it's similar price action. You have a strong Japanese yen, but the pound, for whatever reason, remains strong. Now, I know we live on different time frames over here, but looking at the pound Japanese yen on the 8-hour, we're into the resistance, right? I'm not sure if I think you're back down to the 1 hour instead of the 30-minute, because over the last week, volatility has decreased a little bit, or at least I've noticed it has. And if you have a chart, that would be ideal to share with us. But this looks good, okay, on the pound Japanese yen, right? 1 hour trading, short-term time frame over here. You have the resistance, right? Is there a possibility that this is the high and then we make a lower high? And if we're able to get below this little bit of a trend line and start making lows, that looks like a strong signal to me for anyone short time frame minded. There's a lot of pips down over here. There's a lot of pips until we get to 33.30, about 100 pips, I'd say about 70 pips of room from the time an entry would trigger until we reach down over here. Let's look at the pound US dollar, because again, the pound is stronger than the dollar. Pound is the strong. I'm sorry, I was totally wrong. The pound is the strongest on the day. And it's hard for me to get a read on why that is, whether it was because the pound got beaten up more than it should have on the way down. So it's kind of just still holding up that retrace, or if this is getting area to roll over. Look, for me to make this really safe, it's got to get below this area of support at 1.2297 in order at this point to have the momentum on your side over here. You know, it's hard to tell why the pound is so strong, but at the same time, instead of getting in the way of a freight train, it's better just to wait until the, you know, like if you shoot a rocket up into the sky on the way up, while that's going up, you don't want to get in front of it. But once it kind of stalls out and then starts turning around and making that momentum to the downside, that looks like where it's you know, a better situation to go ahead and step in, which is this support down over here. I think against the pound Japanese yen, what we just looked at, though, that gives an indication of a possible turn of events. That little trend line drawn in, that would be a short-term scalp. And when I say scalp, you know, there's a good, you know, 50 to 70 pips in there. But, you know, for the dragon, that's a bit of a scalp. Okay, and that's, I wasn't even thinking of that, Hanero. That's true. Let's look to the upside over here, right? If this does break out, if this does break out to the upside here, of course, then that leads up to the bullish bias, and because we could be looking at a target, again, there's a couple of hundred pips to the upside. So that's what's great about the dragon. She's not easy to ride, though. She's not easy to ride. So that leaves me with a solid outlook of what is happening and what is going. You can see also she's very oversold here. Let's look at the 1 hour. So also here, you notice Hanero just noted, if it does break to the upside, he'll wait for the pullback and retest. And you know, part of the reason for that, if you look at price and if you focus in here on the entry CCI, which kind of shows whether or not you're overbought or oversold to the downside near term, you could see how this has been since going down towards 133.50, 100 pips lower. It's been overbought to the upside. And if that extends over through that resistance, you know, jumping in with something that's oversold rarely continues, you know, to hold. So what happens is you'll get that pullback into the broken resistance. You see the entry CCI come back down. And then if that resumes upwards, that is definitely a safer way to trade. If you find yourself always following momentum, chasing momentum, like something's moving down and then you enter, you know, you rely on the entry CCI as a way not to enter, you know, against momentum. And by saying against momentum, that means following momentum, chasing it. Because if you're chasing momentum, you're trading against momentum. All right, everyone. And what else do we want to look at? Is there anything else we want to look at? I feel like my plan is very firmly in play and in place. Getting a look at the markets. If there's anything else that anyone would like to take a look at, any other pairs, any setups they're following, any trades they're managing, looking for where they should be looking to take profits. Obviously, every single one of you know when you're getting into the trade where your stop is. And again, the way that I enter trades most of the time is I always enter with that stop loss. I don't even place a take profit in because I'm giving that trade opportunity here. I'm seeing a reversal. The indices just turned green for the first time, well, since the futures. And I see oil trading starting to trade back up a little bit. So it looks like a bit of risk is entering into the markets, at least as far as equities and oil are concerned. Well, I want to look at oil actually right now. The next thing I'm going to be looking at over here, if we do break to the upside over here, I think that the top of this trend line will be the area that I would look at for something actionable. Oil over here, is it possible it could break out of this triangle to the upside? It kind of did fake to the downside. You see this little candle over here? Hold on, let me get rid of this. You see this candle right here? You can see that oil faked a breakdown, held it back up into the trend line, back down. If it does break out of that trend line to the upside, that could get interesting. And, you know, got to follow price. You got to follow price. I don't think we would get higher than up here at 28.55, but that's quite a gain. I don't know what that is. If that's 35% or whatever it is, but that's a huge gain. Watch out for that if you get the break of the trend line over there, because the same way we've seen a lot of like the pound come off so hard and then bounce up so strong. The truth is oil is definitely way oversold, right? And although I am looking for lower oil prices, you know, 14.50, at the same time, you know, to see a big retrace in oil, well, that would seem pretty normal to me. Euro US dollar. All right, so under a bit of pressure right now, off the lows of the day. You can definitely see that. Let's look at the 4-hour time frame. Let's look at this with a fresh, open mind, see what is happening. All right, so once we lost this trend line and this area of support over here, right over here at 1.09917, I'm definitely now with the bearish bias towards it. And let me just go ahead and change this towards into resistance. Now look at this over here on this is the 4-hour. So I'm a big advocate of not taking a trade to, depending on whatever time frame you're trading, to you see price give an indication that it's reversing. How is that reversing? By, if you're looking to buy, price making a higher high than the previous price bar. If you're selling, a lower low. So over here, you can see this resistance, and you can see that price when it broke down below that resistance. I do want to just go down to a 1-hour time frame so you could get a better look at it. As price broke below this resistance here, it then came back up. I'm sorry, it broke right here on this price bar. Came down, came back up, tested that broken support as resistance, and then has traded off. All right, that's the 1-hour time frame. Going back to the 4-hour, for this to flip bullish, you got to clear that to the upside. Right here, if you make a higher high, then I have it at exactly at that resistance, right? I have a high of 1.09902. If you trade above that, then I could feel you getting long. But right now, that stands as resistance. That resistance has been tested once. We looked at the 1-hour. That broken support has been tested once and held as resistance. So that's resistance in the market. Definitely, I have a bearish tint here after this trend line broke, and we broke the support. So that's just being retested. Get it back above it, yes. Then you could get bullish here and look to see if we are able to test up higher. With the equities trading up, that could give a little bit of fuel to Bitcoin. Let's look at the US dollar, Canadian dollar, which the last time we looked was just utterly parabolic. Martine, fantastic. Thank you so much. Hey, thanks, Martine, for looking out yesterday. I definitely made it a point to take extra vitamin C, drink extra water yesterday. Do appreciate. Look at that out of nowhere, seemingly. So I also noticed that oil is a little bit bid, but I don't think that accounts for that move. That is a big, sharp rejection over there on the US dollar, Canadian dollar. How many pips is that? It's about 100 pips. And that came quickly. Look at that. Boom. Mima's right. It's coming back down into support. Mima, you're right. That is coming back down into support, right? Again, I see sharp moves like this. And here, let me get off the 15 and show you when I see sharp moves like that, what I'm talking about. This sharp move down into the support, I wasn't able to stand in front of that and get long. And it's similar right now. You have a sharp move down. So when I see those sharp moves, for me, I'm like, I don't want to get in the way of that momentum. But at the end of the day, you have pulled you were trading up high and you pulled back into an area of support. Definitely still has a bullish bias. The dollar definitely just took a little bit of a hit. But that was the dollar is still up on the day, and it's actually at close to its highest point. Why it's off a little bit, it's still higher than when we began this live stream. 417. I see the peak over there. See, I have my support line in over here because of this peak, but I like yours better, Ima, because you have that top peak there, and then you have all of this area of resistance, which should not be support. I'm gonna go with you, and that's a lot better place to put it for sure. And then you also down to have over there that area of support for that line. Lots of opportunity here for definitely short time frame minded traders looking to take that 10, 20 pips. Speaking of, let's take a look at the pound Japanese yen. And it's just a patient game, right? It's just a game of patience, waiting for things to come for you. Yeah, Martin. So I closed out all of my shorts from between 1.12 and 1.14 in that area. I closed them all out. And on Friday, when the euro was just going ballistic to the upside, and you know, man, that wasn't. I mean, that's fine that they're a trade that's in profit, a trade that's in profit, but what really got me last week, I don't even want to get off that pound Japanese yen trade. What really was really poor trading was I hedged these longs down here with the intention of taking a piece off here and taking a piece off here. Price started rolling over, and I right here, and I exited those trades. So, why I was able to put on a series of good trades, this difference between being at the top of the game and not, right? If I would have held those hedges, if I would have held them to where I was looking, and there was no reason for me to get out of them, except for that fact that psychologically I was looking at this type of price action and then looking us roll over again. Now I would have hit a grand slam, and I didn't. So really poor. And then I exit them. I exit all these trades up here. So there's not much else to say except it was not executed anywhere close to perfection. Not here, Heath. Not here. But however, right now I'm definitely bearish on the Euro US dollar, and it's really simple to see where to get bullish again. Above this area of resistance. At that point, then I have to think that bullish bias, looking to consolidate and hopefully looking for this resistance to hold up here. But it might not be like we've seen straight one ways up and down. It doesn't mean that we're going to see another straight way down or anything like that. There you go. We already have once this morning. Here's the breakdown. On the breakdown over here on this candle, on the breakdown of this candle right here, of that support, you can see then the next bar comes up and retests that broken support, holds as resistance, and now we're coming back down, and now we're trading back up. So fuzzy. I lean towards that dollar strength. Even everything is mixed right now. Unquestionably, everything is mixed. Even we're seeing the equities trading unchanged on the day. Bitcoin, a little bit of bullish bias towards it, coming back up here, looking at another shot. Yesterday's highs. Again, you could look at Bitcoin in the short term. You also have to be aware that we are getting close. We are getting close to an uncorrelated asset about to hit its halving 4-year cycle and the bullish mania phase. I'm on the same page as you, Jesse. And what's great about those, all of those that you just mentioned, is the fact that you're in a situation where you can now limit your risk, right? They all look like they have pulled back into a strong area of resistance, sell resistance in a downtrend. And here's the thing. Now, if you're wrong, you could really limit your downside. And that's why it's interesting. And the potential, do we come down and test the lows again? I mean, I think it's going to happen. I think it's going to happen. So the Hong Kong dollar is pegged to the US dollar. So if you're looking at any Hong Kong dollar pair, you're looking at the US dollar. Now there are those, Jesse, and these are these are some big time hedge funds that believe that eventually the peg will be lost on the Hong Kong dollar versus the dollar, that they will not be able to maintain it. And when that happens, there will be a huge amount of profits there. But, that's not my type of game whatsoever or anything like that. And probably, I imagine without knowing that there's a swamp on that. They're pegged, and people have been calling for an extended period of time for that peg to break. It didn't break during the riots, the protests, or the fight for freedom, I should call it. It didn't break during that. It hasn't broken during the current situation, but there's a lot of money being bet on the fact on the possibility of that peg breaking. You could actually, the best thing to do is Google Kyle Bass, Hong Kong peg, and he's someone who's betting a lot of money on that, and he definitely lays out his thesis very well articulated, and that's the go-to resource if you want more information on that. Well, I don't think that's something that you should get or think about getting involved in. He's been waiting a long time. Oh, here so I'm watching this pattern develop over here. I'm going to add a little bit of an alert so I don't have to keep following it. My base case. Whenever I say base case, I'm usually pretty a pretty strong track record there. Is that we break down over here and come back down and test down at least towards the support at 2333, and we'll see if we break lower or not. That's my base case. So I'm going to set an up alert over there and watch it. Bitcoin looks pretty bullish over here. Let's see if we get a little bit of a breakout today. Looking on the daily, let's see what's going on. It would be nice to make a higher high here than yesterday's price bar on the daily. That's for sure. Gold silver has turned positive on the day. Gold is still lagging a little bit. Yeah. Let's look at the Australian dollar, Swiss franc, New Zealand dollar, Swiss franc. Also, I lean towards the New Zealand dollar, Swiss franc out of the two. Here you can see starting on the daily time frame. First of all, you see that the spike low was put in down here, and now we've retraced up into this first area of resistance, and then we got another one right above us. So both of these could offer an opportunity. Now you could see since we've come up, and we've come up far, right? Over here, you made a lower low. That was the first one, right? So you could play this on the daily time frame and wait for a lower low, or you come back down to the 8-hour time frame. And then over here, you could see even during this session right now, if during the next during the next hour we make a lower low over here, that could be a signal to get short over here. You might want to trade this one on the daily though. You might want to trade this one on the daily and just wait for that lower low to come in to get short. But everything is lined up right now. If we're able to come up and trade up a little bit higher, where your stop loss is. where you could come in with a smaller position size and have your stop loss over up here. But if we make a lower low right here, that's all the criteria, that's all the entry signal I need to get in over here. I lean towards the New Zealand dollar, Swiss franc over here of the two. That if you look at the trading view update yesterday, I said out of the two, I'd look for the New Zealand dollar over the Australian dollar. Or you could, instead of risking, if you were risking 1%, you could risk 0.5% on each and kind of make a basket without increasing your risk by spreading that out. But this looks like it could trigger very soon to the downside. Yeah, I definitely see the value of using the daily here, not getting chopped in over there. And, even on the daily here, this looks like it could potentially, be a pretty bearish candle being put in. Just remember, it's never straight up and down. When we've seen a lot of straight up and straight down, looking for that consolidation, going back to gold. That's why, right now, again, below this area, below 1645, I'm looking for some consolidation over here. Break back above it, get bullish over here, lean down into the support, and it holds, get bullish as well. But over here, I'm neutral. All right, is there anything else we want to look at, or we're going to call this a session? It's up to you all. Please do let me know if anyone has anything. This is a busy calendar coming up the rest of the week. It's been a while since we've had to look at the calendar, but it's time this week. Wednesday, Thursday, Friday are going to be some data points that, of course, you always look for the upside, or not the upside, the adverse side to your trade. And yeah, if this data came in good, then the market might react. It's expecting bad numbers to come in, right? But I do think we're going to see some headline shock. And although everyone is expecting it and braced for it, the thing is that people that read the headlines in the New York Times or the Wall Street Journal, they're not really psychologically ready for the type of headlines we're going to see the rest of the week that could really bring in risk off, as well as the risk off should even come in just for the state of things, right? Just for the simple state of things, risk off should come into the markets. We'll see. Let's look at them both. Let's look at Euro US dollar. Let's look at that in the 4-hour. Yep, Mima, absolutely. True trend is definitely a go-to. You can see here, yeah, DJ, dollar reversing over here, coming back up, making a higher high, getting above that broken support, looking to reclaim it. Still too early. Still too early. And you know what? Again, you might want to look at the daily and wait to see where we close here on the daily time frame. Whether or not this bit of support holds or breaks. There's no rush. This looks like a time in the markets where, indices are mixed. They were down on the day. Now they're slightly positive. We're seeing on the day, dollar's still up. It hasn't reversed, but the day is mixed. And it's too soon to call anything one way or the other. This is the fourth down day in the row here on the Canadian dollar, Japanese yen. Getting a little pullback coming up into the closest area of resistance as well. Again, this is where Mima was just talking about it. This is where it becomes really handy. Waiting over here, waiting for this to become, once again, which it's not right now, overbought, in the downtrend. And then as price takes you back in, come in. Now that's a good way to scalp. Safe way. Look for those steep angles. Look for a steep angle, whatever time frame you're on, and then in that angle, look for the pullback and then the re-entry. It's a choppy day. Recognize the state of the market you're trading in. It is jumpy out there. It's choppy. Don't get whiplashed. Whiplashed is, if you're getting whiplashed, the simplest thing to do is move up time frame, right? That's why we were talking. Jesse was noting. I noted that, you know, on the Australian dollar Swiss franc, New Zealand dollar Swiss franc, it looks like the time to be looking at the daily for the signal, right? Because you're seeing that little bit of choppiness, undecisiveness in the market. You could see why when you're consolidating sideways, you could get false signals. How do you prevent that? Or what's the best way to try to prevent that? Just move up the time frame. All right, so don't get caught out there today. Do not get caught out there today. Caught in the chop. Pound Japanese yen before we get off here. Let me look at the 1 hour to see if anything is developing that looks nice. Yep. Getting close to triggering. Not for me, though. I don't like it. Not for me. All right, everyone. I wish you a really wonderful day. Stay away from the news. Keep positive. Keep positive. Keep pushing. Keep pushing. So that's it. I thank you all very much, and I'll talk to you later.